Live from Singapore, this is Insight with me, Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. The Bank of Japan holding its key rate steady amid renewed yen weakness and political uncertainty at home and in Washington. Asian stocks slipping as bets on imminent Fed cuts recede and big U.S. tech results disappoint. But Chinese markets getting a boost from a surprise expansion in factory activity. And we ask what could separate the U.S. presidential contenders less than a week away from the election. The Yankee Institute's Carol Platt-Labau shares her view on who'll control the White House and Congress. Let's take a look at Japanese assets after the BOJ stood pat as expected. 0.25% it was a unanimous decision. Of course, we're keeping an eye especially on the yen. The yen looking like this. It is 153.40. We've been talking about how it might get to 155, 160, 160 possibly is when intervention could possibly kick in. In the meantime, though, it is about the BOJ keeping rates pretty steady as expected. Lots of uncertainty. For more on the BOJ, let's get to the Asia Trade co-anchor Sherry Yan outside the BOJ headquarters in Tokyo. Sherry, not surprising, standing pat, lots of uncertainties out there.
Yeah, not surprising. It was also a unanimous decision. But what really caught our attention was a balance of risks when it came to the inflation picture. The BOJ actually changing a little bit of the wording, saying that the risks remain to prices skewed to the upside for fiscal 2025, and also making a point to emphasize that real rates are at a significantly low level. So they've actually increased their forecast when it comes to the GDP target for fiscal year 2025 of 1.1%. Versus 1% in the previous outlook. And they've also incorporated the fact that they will continue to hike rates if the outlook is realized. So a little bit of a hawkish tone coming from the BOJ that did not move in the September meeting either. But as you pointed out to the weakness of the Japanese yen, I mean, compared to the September meeting, we were at 140. Right now, we are past at 153 against the US dollar. And those uncertainties related to the Japanese government as well. If we do get more yen weakening with political instability, could that push the BOJ to hike rates faster is a key question right now that we're watching as, of course, we head towards the U.S. election as well. Some strategists thinking that a victory by Donald Trump could actually mean more weakness for the Japanese yen. Credit Agricole saying that the yen could test 160 if that's the case.
And Sherry, of course, all eyes on that presser indication perhaps on when the next hike might be. Would it be December? Would it be January? That's what people are paying attention to.
More than half of the economists surveyed by Bloomberg right now expect the next rate hike to be in December. About a third expected to be in January. We'll be listening to Governor Ueda's tone when it comes to the inflation risks, especially when it comes to the weakness of the Japanese yen, given that when they hiked rates back in July, the yen was near that 162 level at the 38-year low against the U.S. dollar. We'll also be listening to Governor Ueda's assessment of the Japanese economy. Of course, we have this updated forecast for where the growth trajectory is going. But given that even today we do have political parties holding conversations about what the next government will look like, this will be a key factor also that the BOJ will need to look at. If we get more voices from different parties sort of affecting the BOJ outlook is going to be a concern if we see more political pressure, given that a lot of the political parties here in Japan will want to appeal to the broader public. We are expecting an economic stimulus package to be approved by the cabinet on November 14. So those are some of the considerations that Governor Ueda will need to have at the presser this afternoon.
And Sherry, for the markets, more than anything else, more than BOJ, perhaps it is the earnings season. We're in the midst of the earnings season in Japan, and that's pretty key.
That's been really interesting because despite the fact that we are seeing this weakness in Japanese stock markets, at least for today, that wasn't the case when we saw the political instability coming from the general elections over the weekend, where we actually had stock markets rebounding from earlier losses. A lot to do with, as you say, perhaps the earnings season underway right now in Japan, but also the fact that long term, a lot of the analysts that we speak to point to the corporate governance picture here in Japan, to the fundamentals being strong, to the fact that valuations are still cheap, especially compared to other overseas markets. And if we do get some more measures in order to boost financial stability here in Japan by political parties and by the government, that could even be a more positive outlook for Japanese corporations. Having said this, higher rates here in Japan, also a weaker Japanese yen, also labor shortages are having already an impact. We are seeing the highest number of bankruptcies in the first few months of the year up until September since 2013. So those are some of the challenges and risks that policymakers will need to keep an eye on.
That's right. And for the moment, the Nikkei well supported, up 17% year to date. Sherry, thank you so much for that. The Asia Trade co-anchor Sherry on for us in Tokyo. Well, for more on the Bank of Japan's thinking, we're joined by Anastasia Amoroso, MD and Chief Investment Strategist at iCapital, a platform specializing in alternative investments. Good to have you with us.
Good to see you.
So the BOJ stood pat, not surprising. It wants to keep its powder dry, given all the uncertainties. Of course, the government in Japan and the elections in the U.S.
That's right. I mean, certainly not surprising. And I think we're caught between, again, the uncertainties of building the coalition government in Japan, and also really the outcome of the U.S. election is going to be meaningful. But I think more than anything, Bank of Japan is focused on financial stability, and it's really hard to act, when you have those sources of uncertainty. But I do think the case is building for a rate hike from the Bank of Japan going into December, because we did see this week the Tokyo CPI, seemingly the services component of that is really tracking about 1.7%, so close enough to the 2% target. And then you did have quite a bit of yen depreciation, not quite to the critical levels, but obviously, that sets it up, I think, nicely for a rate hike. Also, what happened in the last couple of weeks, or maybe a couple of months, really, is that the expectations for how aggressively the Fed is going to cut rates, those have been rolled back. So the Fed is not going to be as aggressive in rate cuts. So maybe that gives the Bank of Japan more room to act.
We're talking about the Bank of Japan, a central bank that's full of surprises.
Yeah.
I'm just wondering, I mean, there are about a third of the market thinking that that rate hike will come only in January, given the uncertainties. I mean, even if it is a government that's formed, it could be a weaker government that may not necessarily push through policies. If we don't see that rate hike in Japan in December, how might this play out in the market?
I mean, I do think that probably spells more yen weakness, because that is going to be against the backdrop of the Fed actually reducing rates. But, ultimately, I think the approach that is gradual to rate hikes in Japan, I think that's a good thing. We've learned from the U.S. experience, when you get out of the zero interest rate policy, in a very quick way, that causes distress. And, Sherry-Ann talked about some of the defaults and the delinquencies that are building. I think the big risk is when you exit, negative interest rate policy or very loose monetary policy after years of, people counting on it, that's going to create some pockets of distress. So whether it's December, whether it's January, I think the key is that it's a very gradual approach to rate hikes.
The yen, 153 and change. Some say 155, 160. Where do you see headed by year end and perhaps in the first half of 2025?
Yeah, well, if the Bank of Japan does not act, I do see scope for further yen weakness, but I do actually...
To what extent?
I mean, it seems like 160 is the critical threshold. But that said, most foreign exchange strategists say that between 140 and 155, that's sort of the sweet spot that you want the yen to be in order to keep a lid on inflation and at the same time still maintain some of the competitiveness. So I would presume that the Bank of Japan is going to calibrate the policy, whether it's actual hikes, whether it's certain types of guidance, to maintain yen in that range.
We've been talking about what happens in the U.S., i.e. the U.S. election might have implications on the BOJ and also the Japanese economy. How do you see that playing out, and how might that impact Japan?
Yeah, so it's a big wild card what happens in the United States. And, that's why I say people shouldn't pre-position going into the election, even though, by the way, they are pre-positioning. But clearly,
And you'd agree that they're positioning for a Trump win? For
a Trump win. They're pre-positioning for a Trump win. And look, if we do ultimately get a Harris presidency and most likely a split government, I think that is largely status quo. There's largely status quo. You revert back to what is fundamentally driving the economy in the U.S., Japan, China, and elsewhere. But the wild card, of course, would be if those odds are correct and when you do get a Trump presidency, that does mean, going back to the drawing board in terms of renegotiating a lot of trade agreements. I will say I don't think Japan is the #1 candidate on the list that former President Trump would want to go after. It is China, although there is a possibility of the universal tariff as well. Key thing about that is I think the tariffs is a place to start the negotiation. I don't think it's the ultimate destination. So if we end up with a world order where we do try to renegotiate some trade policies and maybe make them, a bit more balanced, I think the markets would look favorably at that.
So where do you place your money? Where do you place your capital? Because if Trump were to come to power, it's 20% more tariffs, 50, 60% more tariffs on China alone. How might that play out? How do you place your bets?
Yeah. So first of all, the global manufacturing cycle is going to struggle under that regime, and we certainly saw that in 2018 after the first and second round of tariffs. You did see pretty significant decline in manufacturing activity, which that is a bit dangerous and warrants caution at the moment because you look at Japan manufacturing PMIs, you look at China, we're still teetering either below 50% or 50, the level of 50 or a little bit above that. So that means that the manufacturing activity can continue to be in the doldrums if President Trump were to enact tariffs. So you don't really go and look to those places. I think you avoid. Well, I would be quite cautious on semiconductors under that scenario because we have heard commentary from former President Trump about Taiwan having a huge share of global manufacturing of semis, and it's a global supply chain, so you'll see the reverberation of that. So to answer your question of where you actually go, from the U.S. investor perspective, or maybe Asian investor invested in the U.S., I think you go to some of the domestic plays. And that's why, Haslinda, we've been seeing companies that have a high share of U.S. domestic revenues really outperform. That's why we've seen the financial sector in the U.S. that's done really, really well. Some of it, I think, are the Trump odds rising. Some of it is the fact that the Federal Reserve is cutting interest rates. But either way, it's a good combination.
Some safe bets out there. Anastasia, hang tight. Anastasia Amoroso, MD and Chief Investment Strategist at iCapital. Still ahead this hour, we'll get insights on the U.S. election from the Yankee Institute for Public Policy. Hear why they're forecasting a victory for Donald Trump next week. Keep it here with us. This is Bloomberg. Welcome back. We're watching chip stocks in the Asian trading session as earnings shed light on divergent themes in the semiconductor sector. Let's get more with our tech reporter, Annabelle Julius. Belle, what stood out?
Well, Haz, I think what really stands out is just that we're continuing to see that divergence between legacy chips on the one hand and AI chips on the other. Take, for instance, these Samsung numbers that came out earlier, and we saw that big chip operating profit miss, really undershooting expectations from investors and analysts. But the company actually did say these concerns around HBM in particular, and this is high bandwidth memory that's essential to AI infrastructure, they had actually been making progress in that. And we saw Samsung sort of trade mostly weaker. It's actually jumped up higher, as much as 3% today, after saying that it was making progress on the certification of its HBM products. So that's a positive for the company. That also came in, for instance, in Renaissance earnings earlier today, or rather Advantest, which you can see here. That stock has been jumping to a record high for the company. Again, this is a company that provides manufacturing that's used in testing of semiconductors, and its products that are used for AI chips in particular did very very well in the latest quarter. So that's another positive for the AI theme. On the flip side, what else we're seeing today is concerns around legacy chips in particular. And Renesas is one that stands out, down 5.5% so far. But Renesas in particular focus, given it's more of those legacy chip demand. Again, that's more of a Samsung story as well. We're not really seeing that demand for older technology and semiconductors that are used for things like automotives and consumer electronics.
Belle, it's been about demand for AI services. Is that holding up?
This is really one of the key questions, and something that's certainly one of the key questions going to big tech in the US in particular, because there certainly has been that concern from Wall Street that companies aren't really realizing the significant investments that they've made to date. Out of the latest earnings, for instance, we saw Microsoft sharing an outlook for its cloud business that just missed expectations. That's also the story of Microsoft not actually being able to build enough capacity to meet demand. The question, though, is as they invest further to build it out, is that going to start to weigh on their margins? That's something that came out from Microsoft, again, a company that's invested heavily into OpenAI. And the point's been made that there are consulting firms out there like Accenture, for instance, that are making more from consulting fees on AI at this point in time than OpenAI, which is the creator of this technology, is actually able to realize itself. Meta, of course, another company in this space spending heavily on AI. It said those sorts of investments are going to be continuing. They haven't seen the payoff just yet, and that's why you saw that stock slipping in late trade as well.
Belle, thank you. Annabelle Drulis with us still. Anastasia Amoroso in the studio with me. Let's talk about Mag 7. I mean, at one time, they seemed so invincible, but on the back of the results that Belle was talking about, we saw quite a bit of selling off. I mean, what's your take on it right now?
Yeah, we got some mixed results, I would say, from the Mag 7. You know, first of all, we did have Alphabet earlier this week that actually reported stronger than expected cloud revenue, and Microsoft was on the other side of that. But I think there's a really important point within that, which Annabelle brought up, which is it's not for the lack of demand that Microsoft was not able to deliver revenue, but it was because of the lack of supply and the fact that they were not able to build out enough data center capacity at once. So for me, that means that we may have some choppiness from one quarter to the other. And by the way, NVIDIA results back in August, was also an example of that. But they've caught up since, and looks like the Blackwell chip production is on pace to actually exceed, or surpass, or at least meet targets, I should say, in the December quarter. So quarter to quarter volatility. But I think the fact that we have to focus on is the demand is strong, it's ongoing, and it's not going away. Look, we have discovered in the last year and a half this massive shortcut to productivity, which is ChatGPT, which is Microsoft Copilot, which are all the other things. So the demand for those is not going away. And so when I take a step back and when I look at some of the numbers and the stats, the global CIOs expect a lot from AI, and they expect to invest a lot more in AI. So for example, in 2024, there's $200 billion that we're going to spend globally on hardware, software, and services. But that $200 billion goes to $1.3 trillion by 2032. So AI spending goes from 5% of IT budgets to 12% of IT budgets. And so that trend, to me, is the most important reason why you continue to stick with the Mag 7 stocks. Look, to build an AI model, you need an immense amount of data. You need an immense balance sheet to build out the data center capacity. Who has that? Some of those Mag 7 stocks.
But the question really is, how much of that is already factored into current prices? We talk about AI demand. We know AI demand has been surging and will continue to surge. How much of that has been factored into prices?
Well, I would argue that growth to $1.3 trillion of spending on AI, that has not been factored in. And the reason I say that is because the way that the analyst models work, they pencil in what they can see and what the company can guide for in the next quarter or two. So it is possible for the next couple of quarters or maybe a year, we've penciled in that demand pickup. But first of all, you can outperform that, you can underperform that, and that's what creates market performance. But over time, as the quarters progress, as the years progress, you look to the next year and the year after that and the year after that. So I would argue that anything beyond probably 2025 AI demand has not been fully baked into some of those valuations. And by the way, those valuations have reset. If you look at the Mag 7 stocks today, on average, they're probably trading somewhere around 26 times multiple. It was 36 just a bit ago before this consolidation that we've had. So you have lower multiples, but you have still upsized earnings expectations. That's a good setup.
Do you see the MAX 7 continue to shape investor sentiment in 2025, or would there be other factors?
I think there'll be other factors, and I think that's exactly what's happened since the middle of this year. Is that if you look at the S&P 500, it had a stellar Q3, but actually the MAX 7 stocks consolidated and were sideways for most of that. So I think it's looking to things like financials, it's looking for things like real estate. So in the U.S. and in places like Europe, it's all about the easing cycle and the rate relief that's coming, and what does that do for the interest rate sensitive sectors. So I think that is going to be the key driver of activity and also markets. But clearly, we can't have the MAX 7 component, be down significantly without impacting the overall market. But I actually think that after this consolidation that we had in MAX 7, as we go through next year, we get closer to that monetization phase and away from the investment phase. So, for example, you look at this year and the hyperscaler CapEx spending on AI in the U.S. is up about 50%. It's also up quite significantly in China as well. But next year in the U.S. is going to be up about 11%. And the year after that, up about 6%. So in terms of CapEx growth, I think the peak growth is actually behind us. And so we should be entering the monetization phase. So I think, that's what's going to drive MAX 7 as well.
We've seen a lot of optimism, euphoria, even in the markets. What's the biggest risk?
Yeah, look, the biggest risk, I think, stems from what happens after the U.S. election. Well, I'll give you two biggest risks, I would say. But the first one is that, how aggressive it is, if it is Trump presidency 2.0, how aggressive, how quickly is he going to unveil the new tariffs, and how quickly does the positive negotiation follows. If it's a uniform application of tariffs and there's not a whole lot that's being done on negotiation to roll back those tariffs, that's a big risk that would weigh on manufacturing activity and over time economic activity itself. The other biggest risk, I would say, if the rate cuts are canceled. I don't think that's going to be the case, but if you look at the U.S., and there are pockets of trouble, for sure. There's credit card delinquencies that have been rising. There's high yield default rates that have been picking up, private credit default rates, so commercial real estate. So if you don't get the rate relief that these sectors are counting on, then I think we may have to reassess.
Okay, on the back of what you have just said, what are your conviction calls? What's a must?
Look, what's a must to me is the financial sector, and probably not just in the U.S., but globally. I do think that steeper yield curves around the world bode well for the financials. I think lower rates, by the way, I don't think rate cuts are going to be canceled. I think
but one rate cut. One more?
Rate cut, one more. Yeah,
yes.
One more in December, one more in November and December. So, but lower rates should spur lending activity, and we're starting to see that. And we also see a big uptick in capital market activity as well. So that is hugely beneficial for the financial sector. So that would be conviction number one. Conviction number two would be that yields are going lower, so that means you do actually need income in your portfolio. And there's a reason why sectors like utilities, for example, have done really well. By the way, they benefit from AI as well. But if you expand that from public markets to private markets, a lot of investors have been looking at private credit, where you can get 10%, 11 or 12% yields. That is pretty good in an environment where yields are going to be going down, so that you want to earn that margin. Maybe conviction number three, maybe that's my contrarian call as well. Yields have risen a lot in the United States, but I think we might be getting close to the peak.
All right, close to the peak in terms of yields, unlikely to get to 5, right?
I don't think so.
Anastasia, thank you so much for that. Anastasia Amoroso, MD and Chief Investment Strategist at iCapital. Let's take a look at how U.S. futures are shaping up, of course, on the back of the disappointing MAX 7 earnings. U.S. futures pointing to a lower open, with Nasdaq futures also in negative territory. Well, still to come. The Yankee Institute for Public Policies will be telling us why they're expecting a Trump victory next week. More on the potential outcome of a tight race. Keep it here with us. This is Bloomberg. Welcome back. You're watching Insight. Let's take a closer look now at the U.S. election campaign and its likely impact on Asia. Under the Biden administration, Taiwan has become a crucial part of the global chip supply chain and a key contributor to the world's AI future. Bloomberg's Annabelle Drewlers takes a closer look at the high stakes for the island's tech industries as China tries to level the playing field.
I will make sure that America, not China, wins the competition for the 21st century.
Two candidates with two different approaches toward Beijing.
To me, the most beautiful word in the dictionary is tariff.
Caught in the middle is Taiwan, which relies on the US for security guarantees, but has deep economic and cultural ties to mainland China. There are signs of a cross-strait decoupling, including fewer people self-identifying as Chinese. Yet Donald Trump's criticisms are just one reason Taipei's trust in the US is also at risk.
Skepticism towards Washington has been increasing in the last few years. We need to chart our own way and not completely depend on Washington and not completely economically depend on Beijing is hugely important.
Who's next in the White House matters to key chip companies on the island, facing uncertainty over industry support in the States, while Beijing pushes to level the tech playing field.
The entire ecosystem in semiconductor has to face actually stronger competition from China. At the same time, with the United States, it's not really clear how much of the subsidies will be coming to Taiwanese manufacturers. So net for Taiwan, it's a loss.
Pressure on Taiwanese chip firms to offshore at least some production is unlikely to abate, even if UBS is among those who see essential operations staying put.
The core and the benefit of this ecosystem, R&D, technology development cost is quite competitive here. So I think for Taiwan, they're going to try to keep it controlled, keep a core base here, and diversify what they need to.
Retaining crucial semi-production on the island carries a risk, as worries swirl that tensions between Beijing and Taipei could spiral into military conflict.
A conflict of some sort is very, very likely. If you think about the need to choose between the U.S. and China, I think it's a very difficult one.
Still, Taiwan's government and big business alike say they're ready to work with either new U.S. leader.
I don't worry about whether the Republic or the Democratic parties.
We already experienced many of the presidential elections, and then we mitigate risk and maximize opportunities.
Annabelle Drewlers, Bloomberg News.
Well, we are in the final stretch now, just a matter of days left in the campaign. Still a great deal of uncertainty about the potential result and many predictions. Among those forecasting a Trump victory is think tank Yankee Institute for Public Policy. And joining us from New York is the Institute's president, Carol Platt-Labau. Carol, good to have you with us. I mean, why are you thinking that it could be a Trump victory?
Well, there are a lot of reasons. Obviously, the polls are tracking very closely between the two candidates. But when you look at certain fundamentals, if you look at Trump victory, my thoughts are based on certain fundamentals, including right track, wrong track numbers. Since 1980s, when the incumbent party is lost, the right track number in the United States is an average of around 25%. Right now, those numbers are at 28%. When the incumbent party has prevailed, which would be the Democrats and Kamala Harris, that number is around 42%. Obviously, at 28%, we're much closer to the point where the incumbent party is thrown out. There are other fundamentals. Gallup looked at measures that have shown some relationship to past presidential outcomes. And on almost all those measures of fundamentals, including party identification and leaning, and the party that the voters assess being better able to handle what they consider to be their most important problems, the Republicans uniformly are chosen over the Democrats. And all of that tends to argue for a Trump victory in a close race.
Carol, it's been quite an extraordinary campaign. We have a president who pulled out from re-election. We had 2 assassination attempts. We have about, $3 billion in campaign spending. As we count down to the election in the next, 5 days, what might still move the needle?
Well, as you say, there have been so many surprises throughout this season. It's very difficult to tell what, at this point, could tip the race one way or another. We keep having these little surprises. Much has been made of, for example, last night, President Biden calling Trump supporters garbage. It's very difficult to tell. And if the polls are accurate, it seems as though most of the electorate has really made up their minds. And so what is happening is each side is looking for the tiniest little occurrences on either side that they hope will push those last few undecided voters their way. And so at this point, almost anything could potentially make a difference, or nothing at all. At this point, a lot of people think, and it tends to make sense, that it really is a turnout game. Which campaign is most capable in turning out low propensity voters? That is, people who might not often vote but could be persuaded to do so this time.
And some people say that's Kamala Harris, that she's the one who will be able to get people to vote, to go out there and vote. And that may work in her favor.
Traditionally, Democrats have had a much stronger, what they call a ground game, than Republicans have. But this time, it does look as though Republicans are voting early, which they have not done in the past. And what is interesting is that they do seem to have some success in getting these low propensity voters out to vote. In places like Nevada, you see that they have worked up quite an impressive vote total before Election Day, and that these do not seem to be their usual Republican voters. So it isn't that they're cannibalizing their Election Day results. They do seem to be having some success in getting people who have not previously voted or voted Republican already have gone to the polls and banked those votes. And so it is becoming, it is looking, at least at this point, as though they are having some success in doing this. Obviously, it's very early, and some states, like, for example, the big prize of Pennsylvania, they don't begin counting votes until the end of Election Day. But in states like Nevada, where you can start analyzing these election returns, things are looking actually very favorable for Donald Trump.
Carol, might gender be where the election is won or lost? And to that end, women are voting Harris mostly, and some say that she has a lead of 14 points, and that might just tip the balance. I mean, how do you look at that?
That is possible. There is a gender gap, but it seems as though the gender gap also works both ways. Women do vote in slightly higher numbers, it seems, but as we've heard, the Harris campaign has quite a problem with men, and especially with men who have not traditionally voted Republican. These men seem to be coming out in ways they haven't before, and men who have voted Democrat in the past now seem to be flocking to Donald Trump, including African American men and Latino men. And this has been obviously a topic of some concern to the Harris campaign, which is why they've had Barack Obama out trying to convince these men to come back to the Democratic Party. And so far, those appeals seem to have been falling largely on deaf ears.
We know that we're pretty focused on Election Day itself, but quite a number of voters have already cast their votes, something to the tune of 50 million. That's about a third of the voters. Right. What do you make of that? It's unusually high.
It is. And it seems that obviously this is an election where there has been a great deal of interest, a great deal of passions on both sides, a lot of heated rhetoric, and a sense that there is quite a lot at stake. And so people are really making an effort to get to the polls and make sure those votes are in. I think part of the numbers as well stem from the fact that in the past, Republicans have been very leery about early voting. And in the past, Donald Trump has advised them not to do it. And finally, Republicans have, in a sense, gotten with the program, and they've realized that if you wait to vote until Election Day, a lot of things can happen to your voter base. You know, life happens, and people who plan to get to the polls maybe just don't go there. And so they've done a much more capable job of encouraging people to get out, to vote early, because every vote that they have banked is one more voter they don't have to check up on and try and encourage to get out. And so some of that, in addition, may account for the extra early voters that we're seeing at the polls.
Carol, if you are right and we get Trump 2.0, what does it mean for security issues? Just today, we had North Korea launching what's believed to be a long-range missiles. What might his policy be?
Well, as we know from Trump 1.0, one of the hallmarks of President Trump's foreign policy has always been an effort to win the day through a mixture of unpredictability and a bit of intimidation and a bit of friend making. And so I think probably you'll see a lot of what you've seen in the past, an effort to wage a little bit of economic foreign policy, a little bit of rhetoric that doesn't sound terribly friendly, and then an effort to sort of come alongside and make friends, or at least speak nicely where he thinks that perhaps might be the best tactic to win the day. And obviously there will be calls for the NATO members to pay more into the NATO budget, and much more in the way of encouraging Russia and Ukraine to come to terms and end that conflict.
And more importantly, what does it mean for trade policy? We know that his trade guru is Robert Lighthizer. What could that mean for relations with China, with the rest of Asia?
Well, obviously, President Trump has always embraced a much more protectionist policy, and we're going to see some tariffs, or at least the threat of tariffs, come in, which, as we all know, can lead to some threat of inflation. And so we should all be prepared for that.
And of course, slower growth, some say. Already the IMF came out to say that global growth would be impacted, especially in 2026. U.S. growth itself could drop by 1 percentage point in 2025.
Well, it'll be interesting to see. I mean, we already saw lower than expected growth in already. And so it'll be interesting to see. I mean, the economy did very well in Trump 1.0. And so I think, we'll have to see how things go. Some of the other portions of President Trump's economic policy served the United States and its people very well. And so, a little bit of that, I think, should be greeted with a bit of skepticism.
But this is the IMF saying that the Trump administration would impact global growth. What would be the overriding policy that you're looking out for that could help the U.S. economy?
Well, President Trump's commitment to a more robust energy policy. Part of what has driven so much of the inflation here in the United States is the fact that we have been very constrained in terms of what we've done with our energy. And having the ability to liberate some of the domestic energy supply would do a great deal to help stabilize prices, make things a little bit more affordable for the people in our country. And I think a lot of people who are struggling economically right now would really welcome that.
But the thing is, some also point out that the Trump administration would dial back on the IRA, which has, added to U.S. revenue as well as helped to create jobs.
Well, I think that they also point to the fact that some of this drilling and some of the energy exploration will, in fact, as it did in the past, create some jobs and, offer some new opportunities. And also do a lot to stabilize some relationships in the world and be helpful in terms of depriving Iran of a lot of the money that it's been using to finance a lot of the mischief in the world.
Carol, thank you for joining us. Carol Platt-Liebau, president at Yankee Institute for Public Policy. Now let's take a look at what's happening in the markets. Yen pairs in particular on the back of the BOJ standing pat, keeping rates at 0.25%. We have the yen trading at 153.10. We have the yen weakening even more, currently down by 0.2%. We're keeping an eye on that 155 level and eventually 160 perhaps for intervention. In terms of euro yen, 166.12. Of course, the BOJ saying that there is a need to watch the impact of market moves on the economy as well as inflation. And Bloomberg TV would like to hear from our viewers, so we've put together a short online survey. Do scan the QR code on your screen right now. Tell us what you'd like to see more on Bloomberg TV. Any other suggestions for improvement as well? Keep it here with us. This is Bloomberg. Well, the BOJ has left rates unchanged as expected. Bloomberg's Avril Hong joins me for a closer look. Reaction to the market looking at the yen up 0.2%, pretty expected.
Yeah, we are seeing that firming in the Japanese currency, but it's also against the backdrop of 4 days of decline. So it might be a bit of squaring away of positioning. If you think about the statement and the messaging that came through, there wasn't a lot of direction for forex traders. You think about how they said the price pressures are skewed to the upside. Those risks are there for next year, but they also trimmed the inflation outlook. So a bit of inconsistencies there. And I think this is something that Ueda-san will have to expound or clarify a bit more on in his presser. Clearly, that's going to be the focus. You're seeing how Japanese stocks, even coming back from lunch break, they haven't really moved, still declining from what we saw earlier in the session. And I think, as you say, this was as expected. Pretty much all the economists had seen no change this time around. Clearly, it was about the US-Japan election uncertainties. You know, he didn't want to rock the boat. As far as perhaps guidance is concerned, that's something that we will need to hear more on from Governor Ueda.
That's right, greater clarity. It is about when he's going to raise rates again. Is it December? Is it January? And I know that we did a survey and a lot of people are thinking that perhaps it's going to be these.
Yeah, I mean, you think about the market pricing, you're seeing about 20% on a December rate hike. Those are the expectations. And then subsequently into 2025, more hikes. Bloomberg Intelligence sees a move in January, April, July as well. And to your point about how it's really a matter of when, we know how he is not a fan of unconventional monetary policy. And then if you look at the data in Japan, remember how earlier in this week we saw, for example, jobs to applicant ratio, that's been rising, supporting the case that the tightening labor market is going to prompt these companies to raise wages. That's a prerequisite that the BOJ wants to see for tightening of monetary policy. So all the environment, save for the politics of it, point to that direction for the Bank of Japan.
Well, the thing is, there's a reason to keep its powder dry. That's a U.S. election. You have the economy also at stake and the uncertainty when it comes, the Japanese government as well.
Certainly, both sides, right? The U.S. and Japan. And Ueda himself, I think this was really interesting in the way that he highlighted how for the past couple of months, his concern has been about the U.S. economy and that in turn is related to the U.S. presidential election. You think about what a potential Trump victory might mean for fiscal spending, for upward pressure potentially on U.S. yields, and then the U.S. economy itself as well. The GDP growth has been coming in pretty solid. You look at the private hiring numbers on ADP, that also points to potentially more upward pressure on yields. Not great for the yen. So, the subtext here is really whether yen weakness is something that could prompt the upward risk on inflation.
And therefore, keep your powder dry. Avril Hong, thank you. Now let's get more analysis on the BOJ decision from Bloomberg senior editor Brian Fowler in Tokyo. Brian, well, the next question is, what next for the BOJ?
Yes, well, you and Avril summed it up beautifully. I don't know if I can say it any better, but of course the focus when Mr. Ueda speaks in a couple of hours will be on any kind of hints in terms of whether the hike comes in December or whether it comes beyond that in January or even later. So he could say that the BOJ has time to mull its policy options, or perhaps that the BOJ will need some time to assess the potential impact on markets of the U.S. election. Any of those comments would signal that the hike is not coming in December. But he could also highlight inflation. Today's statement noted that the risk to prices from the next fiscal year are to the upside. And he could talk about the weak yen impact on import prices. We also had national CPI and Tokyo CPI recently, both just a tad hotter than consensus. So it's going to be all about what he emphasizes. And just remember that the BOJ got criticized for poor communication ahead of the July decision to hike. So we think that Ueda is going to make a lot of efforts here today to really tell us fairly clearly what he intends to do or not do. So we'll be watching both comments on timing and anything on inflation that he has to say.
We'll certainly be watching. Brian, beyond inflation, though, what will be a key factor to monitor in the coming months?
Yeah, so wages are going to be key. And you'll remember that when we had the annual wage negotiations earlier this year, resulting in hikes, commitments to hike of 5% or more, that was a key factor in the BOJ's decision to put an end to negative interest rates with the first hike in 17 years. And it'll be a big factor going forward as well. That annual process is already underway. We've already had the main union group say that it is going to shoot for commitments to raise wages by at least 5% once again. That 5% is right in line with a 3-decade high. And if we see companies make announcements in coming months saying that they are looking to go along with that kind of guidance, that would definitely push the BOJ towards an earlier hike.
Will the yen have an impact, Brian?
Yeah, so, I don't think Ueda would ever say directly that he's going to hike because of the yen, but the yen right now is weaker than where it was in March when they ended the negative rate policy. It's right around the same level ahead of the July decision to hike. And I think we could expect Ueda to say that the impact of the yen is greater than it was before. They've already kind of said that Forex is having a bigger impact on rates than it did in the past and prices. So he may very well talk about the risk that the weak yen could drive up import prices, and that would definitely put it in the direction of another hike.
Brian, thank you so much for that. Brian Fowler joining us from Tokyo. And we have a winner right here. The LA Dodgers have won the World Series over New York Yankees, scoring 7-6. The LA Dodgers win in 5 games. And the Dodgers, of course, were led by Japanese superstar Shohei Ohtani. And, of course, all this in Japan will be celebrating, of course, in their trading rooms as well, except for Deutsche Bank, perhaps. Before we go, a look at our guests for tomorrow. We'll get insights on Asia's economy from the International Monetary Fund. Department Director Krishna Srinivasan will be talking us through the highlights from that latest research. Keep it here with us. This is Bloomberg.